Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, we've got some interesting news to talk about around Bitcoin and some manipulation possibly. Let me show you the chart here. So Bitcoin has been attempting to have a breakout, but it keeps just chopping sideways. But one user, Ted Pillows on X, highlighted what has been happening on the Bitcoin chart, and it zoomed in on the 1 hour chart. And you can see every time Bitcoin has a big rally, there's a big, massive correction here. And the pattern keeps repeating over the past few weeks and so forth. And it looks like manipulation, but also, it could be market makers kind of holding things back until we have the better environment for the market to rally, meaning that people are on holiday, they're distracted. There's not major news or narratives out there, right? Market makers like to run with narratives, buy the rumor, sell the news. This is how markets work. It's the same thing in the stock market, right? So it could be that, but it's painful to see that every time we have an attempted breakout, boom, big dump. And eventually we've seen this time and time again, though. If we're patient enough and we just wait, kind of outwait it in a sense, it will, markets don't go in one direction forever, right? It's either up, down, sideways, but they don't stay in the same position forever. They continue to move ahead. And this is why there's the saying, time in the markets is better than trying to time the markets, right? Now, obviously on this podcast, I tried to give you guys facts and data and say, hey, here's when we could potentially see things so that we can, kind of plan ahead. But obviously nothing is in stone, nothing's guaranteed. We don't have a crystal ball here, but we want to make sure that we're at least using the data to form our thesis versus guessing, and use some data to back up what we're thinking about. So again, painful stuff here. You're just seeing these big dumps after the attempted breakout of Bitcoin. Here's a very interesting chart I want to share with you guys. This one is pretty bullish. So Henrik Zeberg, if I'm saying that right, a head macroeconomist at Swissblock, tweeted out a chart that has the comparison of Bitcoin versus the S&P 500. So essentially, how's Bitcoin moving according to the S&P 500? So he says the Bitcoin S&P 500 ratio has topped. But just like in 2021, we stand right in front of a bounce in the ratio, most likely to a value of 18 to 19. So this is on a scale of 0 to 24. So it goes back to 2017. It obviously covers 2020 and 2021. And of course, now he's highlighting what's happening, in the next potential move. He says in 2021, Bitcoin soared 140% in this bounce. Today, Bitcoin is likely to rally to 150K-ish in this same rally, while the S&P 500 soars into its blow-off top around 8,200. But for all the Bitcoin is a store of value hardliners, be very careful after this coming bounce in the ratio. As I see it, this is the final dance for Bitcoin before the long good night. Enjoy the blow-off top. Now, many of you know I'm leaning more towards this scenario as far as having the higher probability of playing out. We've been talking about it ad nauseum. There are two scenarios. We have a dead cat bounce. Bitcoin does not go to new all-time highs, and you have a kind of a small altcoin rally. I think that scenario is possible, but I think the higher probability scenario is that we have the push to the blow-off top. Stock market, crypto, and much more. You have a true alt season where everything is moving, and it's not because I'm biased and I want that to happen. It's because of the macro factors, which we've been talking about, right? Fed ending quantitative tightening. They've started quantitative easing in December. They didn't even wait to 2026, right? Rate cuts continue. Plus, Trump is talking about the tariff stimulus checks. Plus, you got crypto market structure, which is a huge narrative, which I don't think market makers will leave on the table. So you have all these things, crypto companies looking to do IPOs, even AI companies looking to do IPOs. So who the hell IPOs in a bear market? No one, right? Because then liquidity is dried up, but global liquidity is rising. So again, the macro factors, I believe, outweigh some of the bearish signals we're seeing on the charts. And we do have to wait and see, which scenario is going to play out, because I don't think anybody can definitively say this is exactly what's going to happen. And that's a hard thing for people to say, right? They need to know. Humans need, the certainty, and they can't handle the uncertainty unless you train yourself. And thankfully, I've been here since 2016, so I've trained myself to look at multiple scenarios, think logically and reasonably, not with my emotions. You see many times people are very emotions. It's done, it's over, right? Because that gives them some relief psychologically. Okay, okay, that's it. But or some people say it's definitely not over and it's going to go to new all-time highs. But we can't, again, definitively say one way or the other. We're going to have to wait and see here. But this is a very bullish chart, and analysis comparing Bitcoin to the S&P 500. And many of you know they're correlated. The history has shown us that, and it's all following global liquidity. And the other factor, which I was talking about in yesterday's podcast, is that precious metals such as gold and silver are a huge indicator that the bull market's not over, because we've seen as gold has ran up over the past 2 years, as it's cooled down, Bitcoin has ran up, and that's happening on the micro, right? But on the macro, from a yearly standpoint, we've seen when gold has topped, Bitcoin starts running. The charts showed us, so that's not made up stuff. That is legit facts. So if you go line up the charts, you'll see it. So these things are great signs that there's more left here in this bull market, guys. Now, on the note of silver, which has been making new all-time highs, there's a headline here that I want to share with you guys so you know what's happening. Major U.S. bank blows up from silver trade. Headlines hide the $675 million margin shock currently hitting traders. Many people believe the major U.S. bank is JPMorgan. I think a lot of you know, we've seen it over years. JPMorgan has been manipulating the silver market. Some of their traders got fined. The bank itself got fined for that. So people are saying it's JPMorgan that, with silver blasting to new highs, it's liquidating JPMorgan and some of these other folks who have been trying to manipulate the market. So it seems like JPMorgan is going long silver now. We shall see. I highlight this because it just shows there's some manipulation. And I am concerned that in the future, as these banks and Wall Street firms hold a lot of the crypto assets and a big supply of it, they're going to manipulate it the same way. It's going to be harder for them to do it because crypto is a global asset class that trades 24/7. You can see the supply, the wallets, what's moving, and so forth. It's going to be a little bit harder. But look, they can eventually do that as more people use them to custody their crypto assets, right? I think we know banks are going to launch these things and they're going to go to the regular average Joe and Jane and say, hey, look, you leave your money with us, or you have your money with us, invest in crypto with us and we'll custody it for it. I think we know that's coming. So we shall see. But big players continue to buy and accumulate. So MicroStrategy, Michael Saylor, they bought another 1,229 Bitcoin for approximately $108.8 million. They bought their Bitcoin at an approximate price of $88,568. So big buy here by Michael Saylor. And even Tom Lee's Bitmine, their Ether stash, the report says here, has topped 4.1 million tokens as the crypto and cash holdings reach $13.2 billion. And as we reported yesterday, they're going to start staking a lot of that to earn the yield. So I don't think these guys are buying to watch the price just collapse, as people are saying. I think they want to make the money off the arbitrage of the stock. Now, will there eventually be a bear market? Yeah, but I think I don't think these guys have been buying all this year. And again, these guys are not idiots. And then just to watch the price collapse, it wouldn't make sense. So again, you have this in conjunction with the other factors I've been sharing, and that's why I think there's one more leg here, guys. And I know people are frustrated, they're tired, they don't want to hear anything positive. I've seen that in the comments, and it's because they're emotionally, psychologically hurt because they feel like, oh man, this market sucks. People have been saying it's going to go do this, but then they don't realize that we're talking probabilities here, not certainties, and that even if something doesn't happen in the short term, doesn't mean it's not going to happen in the long term, right? That's something I've learned in the markets. The market don't timing is the hard part, right? Markets don't always line up with our timings, but if you stay in it long enough, right? The saying, time in the market is better than trying to time the market. You will definitely win. So the thesis is that as central banks keep printing, and they keep debasing the currencies, asset prices are going to go up, guys. So that's why I'm not panicking, because I'm not a short-term holder. I don't have the gambling lottery mindset that, oh, I just put my money in, so next week I need the numbers to know how much I won, or that's not how I operate. I used to when I wasn't educated, when I wasn't financially educated. I'm listening to Jim Cramer and CNBC. Now I don't do that, right? I think many of you know we go contrary to those folks because their information is for the masses, not for people who are financially educated. Folks, quick word from our sponsor, and that is Trezor. Trezor makes beautiful hardware wallets and make it easy for you to safely store your crypto assets. I'm a big believer in self-custody. I have been for many years. I've been preaching about self-custody. And Trezor, they were the pioneers in creating hardware wallets, folks. They started it all before Ledger, before the other firms, right? They created the seed phrase setup, and they even have a new device called the Trezor Safe 7 that is quantum ready, brand new design that is top of the level, easy to use, top of the level security, and much more. And folks, their hardware wallets are open source. The code is out there. That's how much they trust what they've built. And they support all the major crypto assets. Of course, Bitcoin, XRP, Ethereum, Cardano, Solana, you name it, all the latest and greatest. They even have a great software suite called Trezor Suite, which helps you to manage your crypto assets, and you can buy and sell within this software setup. They also have a hand holding service. So if you buy the device and you want to talk to a Trezor rep to help you set it up, make sure you do everything correctly, and or you have questions, you can talk to a Trezor rep. That is an added cost, but don't worry, they don't ask you for your private keys. And folks, right now they have a great holiday sale going on. You can get up to like 30% off some of their devices. It's pretty great. So if you want to grab the device, now would be the time, and you can use the code holiday25. So it's 30% off plus free shipping and much more. It ends January 5th. So you still got time, guys, to grab these devices at a discount. And I am a user of the device. I personally use the Trezor Safe 5 and the Trezor Safe 7. So if you'd like to learn more, visit the link in the description. Okay, folks, look at this news. Tech giant to launch crypto wallet. Fintech L1s will bomb. Dragonfly executive. So Dragonfly's Hasib Qureshi, if I'm saying his name right, predicts big tech and Fortune 100 companies will start building in crypto in 2026, but that corporate L1s will fail to challenge Ethereum and Solana. So I absolutely agree with this. One of the things I've been saying is that once the crypto market structure bill is passed, the Clarity Act, we're going to see a surge in M&A, mergers and acquisitions. I believe TradFi firms are going to approach crypto native firms and say, hey, we want to buy you up, right? We want to buy your exchange. We want to buy your wallet. We want to buy your blockchain data platform and so forth, because it will take years for them to build these things. When these firms have been established, they have network effects and much more. And then many of these corporates are going to try to launch their own L1s. We see like, for example, Sony, they've launched Sonium, right, to layer 2 on Ethereum, and some of them may fail. But, it also depends how they use it. If they're using it privately just to move their internal things, that's fine. If they try to build a public blockchain to compete against the Ethereums and Solana, I agree with Hasib here that I don't think they're going to do well because, again, network effects, and no one really will trust a kind of centralized blockchain, especially if it's a public blockchain, right? So I agree here. I think this is a great prediction, and I think we could see the writing on the wall that this is coming. And also, I believe that crypto companies will buy more TradFi firms. Just look at what Coinbase and Ripple have been doing, right? Huge acquisitions. Look at this news. BlackRock's BUIDL hits $100 million in payouts, showing tokenized finance at scale. So really, really incredible stuff here, man. The BlackRock's products, their ETFs, their tokenized fund, all breaking records, all growing. And look, they're the world's largest asset manager. They have the reputation, the cachet. They can easily go pitch people and get them to adopt their products. So BlackRock's first tokenized money market fund has paid out $100 million in cumulative dividends since its launch, highlighting the growing real-world use case of tokenized securities amid rising institutional adoption. The milestone for the BlackRock USD Institutional Digital Liquidity Fund was announced Monday by Securitize, which serves as the fund's issuer and tokenization partner, overseeing on-chain issuance and investor onboarding. Folks, this will continue to grow because you're going to see BlackRock and these other firms who have tokenized money market funds, they're going to go push it to other parts of the world. And because it's on the blockchain, it's going to be easy for people to, buy in and adopt it, right? So they're going to go to the Middle East and different parts of the world and say, hey, you want to get that yield, you want to get access to US Treasury bills, whatever, right? Here it is. And because it's in a tokenized 24/7 real time setup, it's going to work out pretty well. And here's another update on tokenization. So tokenized stocks have stablecoin moment as the market cap hits $1.2 billion. So tokenization of assets and specifically stocks continues to grow. There's huge demand here. So let me give you some details here. Demand for tokenized equities has accelerated since their mainstream debut earlier this year, pointing to this emerging asset class as a potential early signal of broader blockchain adoption beyond Bitcoin and stablecoins. The combined market capitalization of tokenized stocks has climbed to a record $1.2 billion, according to data from Token Terminal, driven by strong growth in September and December. Here's a quote: "Tokenized stocks today are like stablecoins in 2020." Token Terminal said, underscoring how early the market remains. Stablecoins were still in their infancy in 2020, but they have since grown into a $300 billion sector this year. So you may ask, well, how do I get access to these things? Or how can I benefit from them? Certainly, you can look at different exchanges and platforms that are doing tokenized stocks, and then look at if they're doing DeFi, because then you can put it to work, not just hold it, right? I'm sure many of you hold stocks in the traditional way, like I personally do as well. But if you can hold it in the tokenized way and put it to work, to earn, that's a great way to benefit from all this. In addition, look at which blockchains they're doing the tokenization of these assets on, and of course, hold the tokens for those, right? Right now, we're seeing, of course, the major blockchains out there: Ethereum, Solana, the XRP Ledger, and others as well, Avalanche. So I have those in my portfolio. So you want to explore what's being built on the different chains. Okay, moving ahead, China to let banks pay interest on digital yuan wallets from January 2026. So clearly, the countries that have banned crypto in the past and have been anti-crypto, they're building with the tech, right? But the problem is, as I mentioned, I think with the news with Russia, just I think it was yesterday or the day before, is that these governments want to control it because they're worried about capital flight. They're worried about can we tax it and make sure we're monitoring everything. That's the holdup. Or they will go all in, right? So they're going to start slow and then open it up overall. So China's central bank is rolling out a new framework for the digital yuan that will allow commercial banks to pay interest on the eCNY wallet balances starting January 1st, 2026, a move officials say will push the central bank digital currency CBDC beyond its original role as a cash substitute. The new CBDC framework will allow banks to treat the digital yuan as part of their asset liability operations, Lu Lei, a deputy governor of the People's Bank of China, wrote in a PBOC-affiliated China Financial Times article published on Monday. So here's a quote: "The digital RMB will move from the digital cash era to the digital deposit currency era," said Lee. In the report, it has the functions of monetary value scale, value storage, and cross-border payments. Do you see what's happening, folks? Every central bank is building some sort of CBDC stablecoin or digital currency, obviously using blockchain tech. We don't know which blockchain China is using. We're going to have to wait and see. It could be they're using their own proprietary, but there are other countries that are using public blockchains like ETH, Solana, and much more. So very interesting, folks. This is the token economy I've been telling you guys about for years, right? And that the governments, the markets, and the economies will all run on blockchain rails. That is what's coming. Okay, look at this news. This is a little political, but it's not meant to be political in the sense that I'm trying to tell you who to vote for or anything. I'm just reporting the news for you. But as Democrats gain in odds to take U.S. House, Maxine Waters bashes SEC chair on crypto. So, the crypto market's down a bit right now. The Democrats are looking forward to the midterm elections, and we've seen a lot of Democrats have started to win. Now, again, there's a lot of issues outside of crypto, so I'm not here to preach about politics and so forth. We're just looking at the angle of crypto. And the big banks we've heard are looking to ramp up their lobbying. And as I've been saying, Elizabeth Warren and some of these Democrats are going to get big fat checks to try to fight crypto. So we got to get that market structure bill passed, guys. We got to get it done before the midterm elections. And I'm hoping in Q1 of 2026 that's done, because you got, again, Elizabeth Warren and her cronies, and you got Maxine Waters. These people who have flip-flopped and have been mostly anti-crypto, they're ready to get those big bank checks, getting ready to, fight crypto, because those banks, they don't like that you're earning stablecoin yield and staking, because they want you to keep your money in their checking and savings accounts, where they can give you next to nothing, 0.01%, right? While they keep 4% of the interest that they get from the Fed and the Treasury and so forth. So Representative Maxine Waters, the ranking Democrat on the House Financial Services Committee, called for a hearing with Securities and Exchange Commission Chairman Paul Atkins to discuss his crypto moves and other topics. Her party has a strong chance to take the House of Representatives majority in 2026, potentially moving her back into the spot as committee chair. So again, there are other issues out there, that's happening. The world is a big place. People have different things that affect them in different ways. We're just talking about crypto here. What we need to do, though, is get that market structure bill passed. So even if whoever wins, right, the Democrats and Maxine Waters, Elizabeth Warren, they come back into power, they can't do much, right? Even though the banks are lobbying the hell out of them. So this is where, my friends, let's hope the market structure gets done. It's in the Senate, and then once it's done, it goes straight to President Trump. They're going to try to go after the Paul Atkins, but I think they're just using him as kind of the poster child. But really, they're very upset about Trump and his crypto business, right? I'm sure many of you know about this. Look, I as a moderate, an independent, essentially, right? I'm in the middle. I vote for both parties depending on the candidate and so forth. I agree with conservatives on certain things. I agree with Democrats on certain things. I've said, like, I'm not a fan of the Trump meme coin. I don't think he should have done that. That's just a horrible look. But it is what it is, and I've been on record and in the interviews on TV and so we're saying that overall he's net positive. But the optics are just horrible with some of the things he's been doing. But if we can get market structure done, that will help prevent a lot of headwinds and roadblocks ahead, after the midterm elections. So let's see, folks. Fingers crossed. We got to get that market structure bill passed. That is so needed, because you can see what's happening. These people are getting ready to fight. And it's not that they necessarily care about crypto. It's just the banks are lobbying. Hey, Maxine, you know what you got to do. Hey, Elizabeth Warren, you know what you got to do, right? That's what they were doing under the Biden administration. It wasn't so much Biden as Elizabeth Warren was leading charge, with her bank friends, and she revealed her cards when she had that hearing with Jamie Dimon, and they both teamed up to bash crypto. And Elizabeth Warren is usually the one that's out there saying banks are this and bad, but then all of a sudden, Jamie, isn't crypto the most horrible thing ever? And Jamie's out there, yes, Senator, it's the most horrible. Right? It was pathetic, and of course, she had Gary Gensler at that time, but he's gone now. So, Maxine Waters, they're going to put on the dog and pony show, and they're going to lie about stuff, and obviously they're going to use Trump. But the point is, this technology is here to stay, and we got to get regulation around it to protect consumers and allow innovation to flourish. All right, folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Folks, be sure to support the podcast by subscribing to my free email newsletter. It is 100% free on Substack. Link will be in the description. I'll be putting out a write-up this week. Also, check out my book on Amazon. It's available in paperback and digital. Grab a copy, guys, and check it out. Also, if you want to expand your knowledge about crypto, check out my course at mycryptocourse.com. Knowledge is power, folks. So understand all aspects of the crypto market by taking this course. And link will be in the description. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.